how do you see this current market environment? Because the unanimous calls that I get range from how it is prudent to not be invested in India currently. Yeah. If you want to be invested, then look at only the large caps. Don't look at the mid caps and the small caps, and keep a certain percentage of your portfolio in cash. There is almost nobody saying that start hunting actively in the mid cap and the small cap space, or that take an oversized bet out there in that bucket. How do you think about the situation?
Yeah, I mean, it's always good to have too many worries around you. That's where you find value, right? So I think after a long time, at least you're finding exciting opportunities. It's not the universe which has become cheap, but surely, if you're a stock picker, you don't need the universe to be cheap. At least there are so many companies in this kind of a market, which are trading at like 15, 20 times kind of a multiple, which were not available. I mean, so many, what happens is that in this kind of a market, which is more driven by liquidity, when it comes down, again, it's because of the liquidity, right? That some people are forced to exit, some just take allocation decisions at these kind of times. And it's an extremely consensus call these days that you allocate to large caps if you want to be in India and get out of mid and small cap kind of space. So when liquidity comes out, good, bad, doesn't matter. Everything falls. It's just a matter of liquidity. And there's so much money which had gone into this space that when things come out, in this kind of times, when there are so many alarming calls, who is going to be buying at this point? So there are very few buyers, a lot of sellers. Some are not getting out because they probably don't have liquidity to get out, right? So I think these are the times when you get this opportunity. And so I look at it as a cyclical, it's like almost like an annual sale. Or sometimes there is one big sale which happens every 3 years or 2.5, 4 years. That's a very, very common timeline when there's a big sale which
is
happens.
That sale, you think?
I think so. This is definitely, last correction we had started in December 21 and it continued sort of towards 22, probably half of the year. And then 3 years down the line, again, September 24 is when we had the peak in the market. So we're already there, 5-6 months. And generally, I've seen that the average duration of correction is that 6 to 9 months. Right? And the faster it corrects, the shorter is the duration.
Right.
So this time, I think the speed was pretty slow, but then last 1 month, the speed has just accelerated. Right? So there has been a sharp correction which has happened. And again, I think we need to remind ourselves that you will never get such a big sale unless there are warning signs around you. So I feel happy if there are too many people warning against it. That means that the weak hands can't withstand such warnings. Only the strong hands will withstand these kind of bombardment of warnings, not just from Indian investors, but also what's happening geopolitically. So I don't know what will happen in the next 3 months or 4 months, but I'm pretty sure if you are a good stock picker from a 3-year perspective, there is exciting opportunities, and it will be shocking to me if you can't make money over a 3 to 4 year period, reasonably above average kind of returns from the kind of valuations which are available in some of the select good quality companies. Right? And again, I think, I put up one analysis on Twitter, which is comparing large cap, mid caps and small caps, right? And I'm comparing more of large cap and small caps, where I divided the universe into 3 buckets. One is PSU companies, right? Then the private banks, because PSU companies and private banks trade at very different multiples, right? And then you have the rest of the universe, right? Large caps, when they say, large caps are trading at 19 times forward or, 21, 22 times kind of backward looking, is mainly because of the mix of the large caps. 1/3 of the profits in large caps come in from the PSU basket, which trades at 8-10 times kind of a multiple, right? And then when you look at the private banks, which make up for about 17% more, so 50% total, again, they also trade at that 15, 17 kind of multiple. And then you have rest of the bucket, which is trading today at 40 plus multiple.
Interesting.
These are median valuations of, so then you compare that with the small caps, right? There is very little PSU as well as private bank contribution from these. The both put together probably will be 15%, right? So then you look at the mix, right? And then you have the 85% bucket, which is trading at 30, 32 times kind of a multiple compared to 40 plus in the large cap. That's the real comparison. You can't just compare a mix of bucket, which has all quality, but if the low quality is high in a certain bucket, overall you will feel that the valuations are low, but that's not really. I mean, how many portfolios have 33% allocation to PSUs?
So effectively you're saying that if you don't want to buy PSUs and if you don't want to buy private sector banks, then the large caps is probably more expensive than the median small
Absolutely.
cap.
Just look at all the companies.
Just
remove those two buckets, which are always cheap. You can't look at them from a P multiple, because for a 10 times P multiple in a PSU can be also expensive.